Let me introduce you to my free forex trading course. With this course, you'll learn how forex trading works and, of course, how you can make money from it. We'll start from the basics and go all the way to advanced strategies, covering everything you need to trade forex effectively. I can confidently say that this is currently the most comprehensive free forex trading course available on YouTube. I'll teach you everything you need to know to trade forex without requiring you to purchase any additional courses. What will you learn? We'll begin with the fundamentals such as, what is trading? What is a broker? Basics of technical analysis. As you progress, we'll dive into more advanced topics. Types of strategies, best indicators, position management, money management, and much more. The timeframes in the video will help you navigate through the different chapters, so you can jump to the sections that interest you the most. In that same pinned comment, you'll also find other free content, such as a free cryptocurrency trading course, tutorials and advice on common mistakes I made when I started, additional resources to help you keep improving in the world of trading. About me. My name is Jamie Dways, and I'm a financial advisor and the author of the books Trading Desde Zero, De Analista Trader, and Diario de un Trader Professional. I've been trading in financial markets since 2009. I've also worked in investment banking and have traded various assets using different strategies. Now, I'm bringing you the best free forex trading course on YouTube. Introduction Module. In this first module, I'll cover the basics to help you build a solid foundation for the course. You will learn what trading is and how to start from absolute zero, how to install and configure trading platforms, different types of trading, types of assets, what a broker is, how to master financial leverage, profitable trading strategies, and much more. This section will be entirely educational, focusing on key definitions. That way, when we move on to more practical topics like technical analysis or advanced strategies, you'll be able to follow along with ease. I hope you enjoy the course and that it helps you take your first steps into the world of forex trading. What is trading and how does it work? Trading is when two parties agree to exchange an asset at a certain price. The seller represents the supply and the buyer represents the demand. So, if you're exchanging an asset, you're trading. Where does trading happen? In financial markets. Notice that I say markets, plural, because there isn't just one market, but rather several financial markets. To better understand this, imagine going to a traditional market. In that space, you'll find a fish market, a butcher shop, a fruit stand, etc. At the fish market, you can buy different types of fish. At the butcher shop, various kinds of meat, and so on. In financial markets, it works in a similar way. Each market trades a different type of asset. The main financial markets are the stock market, which is where shares of companies are traded, the foreign exchange market, forex, where currencies are traded, the crypto assets market, where cryptocurrencies are traded, the commodities market, where you can trade assets like oil, natural gas, and even copper. Who is the person who buys and sells in these markets? A trader. If trading is the act of buying and selling, then the person who trades is a trader, essentially a dealer, operator, or even an investor. It's all the same. Important. Engaging in trading makes us traders, not brokers. So, who is the broker? Brokers are essential for the functioning of markets, but will never be an individual person. A broker will always be a legal entity, meaning a company. Technically, brokers are called securities firms or securities agencies, and to obtain a broker's license that allows them to operate as such, they must meet strict legal requirements and, of course, have millions of euros in capital. You'll also often hear about exchanges or currency exchange. Later on, I'll provide more details about this, but to sum it up briefly, an exchange is practically the same as a broker. But what is the role of brokers? Brokers are intermediaries between us and the market. In other words, they are the only way to access the markets. Think of it like a toll highway. If you want to trade or operate in financial markets, you absolutely have to go through a toll. There are as many toll roads as there are brokers, and they all lead to the same place. The only thing in our control is choosing the toll we think will be the best option. Of course, The best option is not always the cheapest one. Would you choose a very cheap toll if the road were full of potholes where you might have an accident? Probably not, and neither would I. I'd rather pay a bit more for a toll with a perfectly smooth road that ensures my safety. The same goes for brokers. The tolls are the commissions. Choosing the broker with the lowest commissions doesn't guarantee the safest path. So, if your brother-in-law or anyone else ever tells you they're a broker, 3 things. They're lying. They're not a broker. They have no idea what a broker actually is. If they don't understand what a broker is, they probably don't know how to make money in the financial markets either. Now we know that the only way to access the markets is through brokers. How do we do this? Through trading platforms. There are hundreds of trading platforms, but 95% of brokers use either the MetaTrader or TradingView platforms, which function roughly as follows. Imagine there's a company called XYZ, and its shares are currently trading in the market at $100. The broker registers this price and sends it to the trading platform within milliseconds. The platform receives the asset's price and displays it instantly on a real-time chart. The trader views the chart on the platform and decides to click the Buy button for 10 units. This begins the journey again, but in reverse. After the trader clicks the Buy button, the purchase order reaches the broker, who immediately sends it to the market. If someone is selling those 10 shares at $100 each, the exchange takes place. The buyer becomes the new owner of the shares, and the seller receives the money. This entire process happens in fractions of a second, and the broker charges a small commission for acting as an intermediary. Now that you know this, let's go over the key concepts you need to memorize. Trading, operating, or investing in financial markets. Trader, the person who trades. Saying, I want to be trading doesn't make sense. It should be, I want to be a trader. Broker, the company that intermediates between the trader and the financial market. Financial markets. There are many types: stocks, forex, crypto, commodities, and they are where traders do their trading, that is, where operators invest. How do you really make money doing trading? If your goal is to trade, the only way to make money is by buying an asset at a lower price than the price at which you sell it. In other words, buy low and sell high. It's that simple, just like any business. However, if your goal is to invest in companies, in addition to making money by buying low and selling high, you can also benefit if those companies generate dividends. This means that at the end of the year, if the company makes a profit, it distributes those earnings among its investors in the form of dividends. This only happens in the stock market of companies, not in other assets. In conclusion, the difference between trading and investing is usually the time. When we talk about trading colloquially, we refer to buying and selling an asset quickly. By quickly, I mean seconds or minutes, what we know as scalping, the fastest type of trading, where you open a position and close it in that same time frame. There is also day trading, where positions are closed before the day ends. Another type of trading is swing trading, which is a bit slower. In this case, the position can remain open for several days or weeks, surfing the wave. If your goal is to buy today and sell in a few months or even years or receive dividends, what you're doing is investing, not trading. To make money, we've already talked about brokers, which act like toll highways. Now, to see the money you can make, you need to select the vehicle you'll use on those highways. Broadly speaking, you have 2 options. 1. Spot trading, which would be like walking. It's a slow process, both to gain and lose. 2. Trading with derivatives, which would be like driving a car. It's fast, both to gain and lose, since your capital is multiplied. Imagine your financial advisor tells you to invest in Berkshire Hathaway, which is currently priced at $300. You have $1,000 to invest and 2 options: to invest in spot trading or with financial derivatives. If you decide to trade in spot, how many shares can you buy? If one share costs $300 and you have $1,000, you can buy 3 shares. Let's assume you pay a $10 commission to the broker. Unfavorable case, the price drops to $297, minus 1%. You sell your 3 shares and receive $891. After deducting commissions, you lose $19. Favorable case, The price rises to $309 plus 3%. You sell your 3 shares and receive $927. After deducting commissions, you gain $17. If you decide to trade with CFDs, you can take advantage of financial leverage. Let's assume a leverage of 1:5. With your $1,000, you could control $5,000 worth, allowing you to buy 16 CFDs at $300 each. Unfavorable case, the price drops to $297 minus 1%. You sell your 16 CFDs and receive $4,752. After deducting commissions, you lose $49. Favorable case, the price rises to $309 plus 3%. You sell your 16 CFDs and receive $4,944. After deducting commissions, you gain $143. As you can see, with the same initial capital, leverage allows you to achieve greater profits, but also greater losses. The foreign exchange market, forex, works in a similar way, but with even higher leverage, sometimes up to 130. This means that with a small capital, you can multiply both your profits and your losses. While it may sound risky, and it is, thanks to financial leverage, it is possible to achieve significant returns. However, remember that CFDs are complex instruments that carry a high risk. According to statistics, approximately 74% of retail investors lose money when trading CFDs. That's why it's crucial to understand how they work and whether you're willing to take on that risk. Now that you know the basics of this business, you can start thinking about getting into trading. How can I start trading? The only thing you need to do to start trading is to pay attention while reading this video and take notes if necessary. Below, you will see the 7 steps to start trading from scratch. This is the backbone of the course, where in the following lessons, we will develop each of the 7 steps in detail. The first step is not only important, it's essential. If you skip this step, you'll never be able to trade. Step 1. Choose a broker. You now understand what a broker is. If not, go back and review. But what's most important is knowing which broker to choose and why. There are many criteria for choosing a broker. First, I'll show you a list of the key points to consider, ordered from most to least important, and then I'll share my opinion on which broker to choose. Regulation and security. If the broker is regulated by the CNMV, FCA, SISEC, BaFin, or any similar European Union regulatory body, that broker already offers a level of security. Even if you're trading from Latin America, this ensures you won't be scammed, that your withdrawals are guaranteed, and that in the unlikely event of bankruptcy, your capital is protected. 2. Costs and commissions. There are many types of commissions, but the main ones to consider are the trading commission and the spread. Here's something to keep in mind. Some brokers claim they don't charge commissions, but then they have a higher spread. Others may offer a very tight spread, even advertising a 0 spread, but then charge a commission. In my experience, there's so much competition in the sector that spreads are quite narrow. The differences in commissions are minimal. It's better to choose a well-regulated broker with at least 15 years in the industry than to go with one that has only been around for 2 or 3 years, but offers very low commissions. Variety of financial instruments. Consider the diversity of markets, stocks, forex, cryptocurrencies, etc., and the availability of derivative products, such as futures or options on stocks, forex, etc. Step 2. Choose and install the trading platform. Whether you open a demo account or a live account, the broker will ask you to choose a trading platform. The most widely used platform is MetaTrader, so download and install it. Whether you like it or not, you need to know how to use it. I also recommend opening a demo account on TradingView. It's probably the best trading platform, but very few brokers allow trading directly through it. To me, trading platforms are like cars. When you get your driver's license, it's not for a specific car, but for any car. It's the same with trading platforms. A good trader shouldn't be limited to one platform. They should be able to trade on any. I mention this because you'll probably prefer TradingView over MetaTrader, but there's no choice. You need to learn to use both. Step 3. Choose a market to trade. The 3 most popular markets are Currencies or forex market, cryptocurrencies, company stocks. There are other markets such as commodities, bonds, etc. When I started trading in 2009, I traded stocks in the Spanish market. If I were starting now, I'd begin with the forex market for many reasons that I'll explain later, but for now, remember this point. Step 4. Choose the financial asset you want to trade. Imagine you decide to take my advice and start with the forex market. In it, there are many currencies like the dollar, euro, yen, British pound, Swiss franc, Canadian dollar, Australian dollar, and many more. This market operates in currency pairs. You've probably heard of the euro/dollar. It's a pair where euros are exchanged for dollars. The three most significant pairs are euro/dollar, pound/dollar, and dollar/yen. If I were starting from scratch, I'd focus exclusively on the euro/dollar pair. Master that, and then add other pairs no sooner. Step 5. Choose the time frame to analyze the market. When you select an asset on the trading platform, you need to decide whether you want to view the price on daily, hourly, or minute charts. My recommendation: start with the daily chart, analyze the market, and ask yourself, is the price ultimately going up or down? Then move to the hourly chart and repeat the same process. Analyze the market and ask yourself the same question. Finally, switch to the minute chart, perform the same analysis, and ask the same question again. Once you have a clear sense of whether the price is rising or falling, move on to the last step. Step 6. Make a decision. After gathering several indicators suggesting the price is moving up or down, the most important step remains: making a decision. There are only two decisions: buy or sell. To do this, all you have to do is press the corresponding button. Entering the market is easy. As you see, it's just pressing a button. The only hard part is pressing the opposite button to exit the market with profits. That's the real challenge. And here's where the key to all of this lies. How do you know when to press the button to exit with profits? With step number 0. Why step number 0? Because it's the foundational step, the one before all the steps I've mentioned so far. Without step number 0, the following 6 steps are meaningless. Step 0. Training before you begin. Don't even think about starting without a solid foundation. Nobody would build a house by relying on YouTube videos. Anyone wanting to build something lasting would go through formal training. Trading is exactly the same. 77% of traders aren't able to earn even €1 by the end of the year. Why? Because they either don't have proper training or think that what they watch on YouTube and social media is enough. Some may get lucky and make a profit at the beginning, but time has a way of setting things straight, and they end up losing everything. If this has happened to you, don't worry, it's common. The solution is simple: you need quality training. And I'm sorry, but quality training is never free. There will always be two groups: those who settle for free or cheap training, and those who invest in training that works. This latter type, quality training that actually works, is available at jamiedways.com. Take a moment to pause before you continue and check it out. If you found this class useful and feel like you're learning from this free trading course, imagine the level of knowledge you could achieve as a student in our premium trading course. If you've ever felt stuck in trading due to the fear of losing, lack a clear system and strategy resulting in inconsistent outcomes, or even if you have experience but struggle with emotional control, preventing you from being profitable, the solution is right in front of you. The only thing missing is investing in knowledge. Stop making excuses about not having time to learn or trade, because we all have 24 hours in a day, and if you manage your time well, you can carve out 20 minutes a day to learn. You'll find more info in the top right corner by scanning the QR code on the screen and through the link in the description. Click and let's connect inside the premium platform.